IndiaMART. They came out with their numbers on Wednesday. It was a flat sequential revenue quarter, a little bit of a sequential dip in margins, but still very healthy at 37 to 38%. Profit growth was quite high, 49%, aided by higher other income. Dinesh Aggarwal, founder and CEO of IndiaMART, is now here to join the quarterly numbers. Thank you very much, Mr. Aggarwal, for joining in. This is Reema here. So the first question is on margins. Now, you've always guided that historically margins, on a normalized basis should be 33 to 35%. You are operating at higher margins. What explains that? And when will you get back to margins of 33 to 35%?
See, if you really see, we have not been investing in the new customer growth because our churns are elevated. And that is what is also shown up in the functional P&L, where our sales and marketing expenses used to be about 17-18%, but we are only able to spend 13-14%. And that is the precise reason that the margins are elevated for right now. As we start to invest in growth and once we have the better handle on churn, I think the margins should, in the long run, trade between 33 to 35%.
So this problem of churn, it's been a problem now for a while, more than about 1.5 years. And when we speak to you every quarter, you've been saying you're taking steps to address it. Why is it, what's been the problem area, the bottleneck in addressing the high churn? And when do you think it'll get resolved?
Yeah, ma'am, this is a large horizontal marketplace with especially dealing with small and medium enterprises. And small and medium enterprises have their own churn. There are external economical factors, and there is a product market fit and changing expectation setting of our internet users over the last couple of years. So I think it's a combination of a lot of things. Even to get the first time right, it takes multiple iterations. We probably found them getting it right sometime around 2015. It has worked very well until 2022-23. And post-COVID scenario, I think we are reworking on retweaking certain assumptions that we were having during 2017-18 when we when we had lesser number of suppliers on our platform. Now we have a lot more number of suppliers, and we can do more local matchmaking within the suppliers. Similarly, now we have better tools for categorization of the suppliers and their products using the AI and the photos based identification. So we are working on some of those. Hopefully the result should be here soon.
Mr. Aggarwal, good morning. Thank you for joining in. What about the results among the paying subscribers, sir? You had a decline in the previous quarter. Even in this time around, your growth has just been 1%. When do you see that stabilizing? Do you see that happening in the second half of the year, or do you expect this year to be a flat year as well for subscriber addition?
As I said, in the last many quarters, I have been saying that please wait for a couple of more quarters, and I have nothing more to say even today. So let's just we are keep working. We have done that multiple times in the past. I think it is taking much longer at this size and scale today. But I am pretty confident that we and our team would be able to find a better solution to this.
Do you think 2 more quarters, 3 more quarters? I know this is a tough one, Mr. Aggarwal, to answer, but that's the question everyone wants to know. That because IndiaMART was such a high-growing company, high-growth company, just till 1.5 years back, and things have slowed down with fewer paying subscribers, the high churn, and therefore now you're not investing. So, when does it get back to what it was, say, 2-3 years ago?
Yeah, that's what I'm saying. Let's just wait for a couple of quarters, and I hope I'm able to give you a better news. Okay.
Until then, margins will remain elevated.
Yeah.
All these things will get fixed together.
Yes.
Low churn, return of paying subscribers back to 5,000 rupees, and then margins coming back to 33 to 35%. All of them are tied, and they will all happen together.
Yes.
Okay. What about collections? We've seen a bit of an improvement in your collections, at least in Q4 versus the prior quarters. But again, it's still lower than the historical levels of 15%. Can you throw some more light on what led to the collection improvement and the way forward?
Yeah, so collection has 2 parts. One is the average collection per customer that we get, and that has been doing very well. So whatever growth that we got in 2022 and 2023, many of those customers have upgraded to gold and platinum. And currently our gold and platinum base accounts for about 75% of the overall collection and revenue. And there, even the average collection per customer is going up quarter on quarter. If you see last so many quarters, it has been almost 8 to 10% every quarter. While the second part of that is the number of paying customers. And since the number of paying customers, we have not been able to grow because due to elevated churn in the first year silver level, silver monthly and silver annual customers, that's where the second part of the customer collection growth is not coming. Otherwise, collection growth would have been in the higher double digits. So currently, until we fix the paying supplier growth, I think the collection will remain in this range.
The other bright spot this time around has been the improvement in ARPUs, Mr. Aggarwal. It was up around 11%. Do you see any further scope of increase here as well?
I think in terms of percentage, no, but this will continue. About 8 to 10% of the ARPU increase will continue for at least next 1 year. That much I can say.
Okay, 8 to 9% improvement every quarter in ARPU, at least for the next 1 year, is what you have reasonable confidence about. What is the cash right now on the books, and what is the board thinking in terms of deployment?
Yeah, cash, we have about 2,885 crores at a consolidated level. And the board has declared a dividend of rupees 50 with 30 rupees dividend and 20 rupees special dividend. That takes away about 300 crores from here. We have about 1,678 crores of deferred revenue. So that leaves us with about 1,000 crores of safety cash for a company of our size. We will continue to accumulate and see if there are any investment or M&A opportunities going forward.
Do you see those deferred revenues trending down, Mr. Aggarwal, anytime soon with 1,600 crores? Do you expect that to come down and accrue to your P&L statement? And part two is that you have 1,000 crores. You said you can try utilizing that 1,000 crore cash for M&A. Is there something on the lookout?
No, we always have been looking at these things. Last year, we made some of the follow-on investments. We also made a very good investments in ID5, and ID5 as a company has done very, very well. On your question on the deferred revenue, in fact, deferred revenue is the very healthy metrics for our future revenues. We have a current portion of deferred revenue at about 64% and non-current portion at about 36%. So that makes it about 20 months of revenue, pre-booked revenue, which is there in the deferred revenue. And that gives us the confidence that our revenue from operation, despite the collection being lower in the past few quarters, revenue from operations has been going in the double digits.
Okay. So last year, Mr. Aggarwal, just one final question. Your revenue growth was 16%. In FY24, revenue growth was 21.5%. FY23, revenue growth was about 30%. What can you guide your shareholders for what IndiaMART is likely to do in FY26? I know it's tough, but some sort of an indication to the shareholders.
Yeah, given the revenue growth always mimics the collection growth in the last 4 quarters or so. So if you really see the last year, entire year, the collection growth has been about 9%. And based upon that, we can assume that revenue growth will also come matching towards that side for the next year. Unless the collection growth improves significantly based upon the paying suppliers growth, the revenue growth will also come down to about 10%.
All right, Mr. Aggarwal, we'll hold you to these numbers. Thank you so much for sparing time and joining us today. Wish you good luck for FY26. By the way, IndiaMART has recovered from the lows of the day, currently trading around 0.8% lower. What has fallen